Welcome to the next video in the series on financial resources for small business. There is additional support for small businesses from the federal government in the form of wage subsidies and government-guaranteed loans. These are available to employers of a small business. The two subsidies are the temporary wage subsidy, the 10% subsidy, and the Canada Emergency Wage Subsidy, the 75% subsidy. The subsidies have different criteria, and as a result, an employer may be eligible for only the 10% subsidy, for only the 75% subsidy, or may be eligible for both subsidies or for neither subsidies. If an employer qualifies for both the 10% subsidy and the 75% subsidy, the employer's benefit under the 75% will be reduced by an amount equal to the employer's benefit under the 10% subsidy. Both subsidies relate to remuneration paid to employees who are employed in Canada. How to apply for the Canada Emergency Wage Subsidy, the 75% CEWS. Canada Revenue Agency has opened the application process on the CEWS webpage as of April 27th and will release funds starting on May 5th. To get ready, they have released instructions on the CEWS webpage on what you need to do as an employer to apply and have enhanced the eligibility information as was updated earlier. The webpage also includes a calculator function that guides you as an employer through a step-by-step calculation of the CEWS and enables you to determine the subsidy amount you can expect to claim based on the information that you enter into the calculator. You will need this figure when you complete your application. CEWS claims will be subject to verification by the CRA. Therefore, the CRA will begin to release funds for approved applications on May 5th. I'm advising employers to take advantage of the first subsidy, the 10% one, that you deduct from your source remittance now, and you will need this figure for the 75% CEWS claim when you use the calculator function. There is a spot to enter this amount. The calculation is lengthy and may require your bookkeeper or accountant's help, especially if they do your payroll. The eligibility periods are only from March 15th to April 11th, 2020, April 12th to May 9th, 2020, and May 10th to June 6th for the 75% subsidy, and March 18th, 2020 to June 19th for the 10% subsidy. Amounts an employer receives related to the 75% subsidy and the 10% subsidy are taxable to the employer. We have included a chart that provides the details related to the eligibility criteria to qualify for the subsidies, the eligibility periods, the amount of the subsidies, and the administration of the subsidies. There is a required reduction of an employer's revenue of 15% for the first period, March 15th to April 11th, and the reference period is March 2020 over March 2019, or the average of January and February 2020 to qualify for the 75% CEWS. Period 2 and Period 3 requires a reduction of revenues of 30%, and the reference periods are April 2019, or the average of January and February 2020, and May 2019, or the average of January and February 2020 again. The question that is often asked is, how does an employer benefit from the CEWS? Here's an example of how an employer, corporation in this instance, will benefit from the CEWS and the effect the subsidy may have on the cash flow of the business. John and Jane own a corporation that operates an automobile repair shop. They are working full-time, each drawing a salary of $1,300 per week, and have 3 part-time employees, each earning $800 per week, for a total weekly payroll of $5,000. John and Jane have reduced their operating hours due to decreased demand for their services. They had initially laid off their employees, but they have now decided to rehire them following the announcement of the Canada Emergency Wage Subsidy. Their employees are not being asked to report to work during this challenging period. John and Jane are now keeping their employees on the payroll, paying them 75% of their pre-crisis salary, $600 per week. John and Jane would be eligible for a weekly wage subsidy of $3,494, $847 for each of themselves and $600 for each of their employees. They would also be eligible for a 100% refund on their employer-paid contributions to employment insurance and the Canada Pension Plan in respect to their employees, providing an additional benefit of up to $124 per week. At the end of each claiming period, John and Jane would submit an application through the Canada Revenue Agency portal, attesting that their decline in revenues in each month is sufficient to qualify when compared to the average of January and February. They would also report the total remuneration paid to themselves and their laid-off employees during the month. As John and Jane have access to direct deposit with the Canada Revenue Agency, they would receive their subsidy shortly after each application. The same scenario would apply to a corporation that operates a business that the employees were still working. Another question often asked is, what is the interaction of 75% wage subsidy with the 10% subsidy? On March 25, 2020, the COVID-19 Emergency Response Act, which included the implementation of a temporary 10% wage subsidy, received royal assent. For employers that are eligible for both the CEWS and the 10% wage subsidy for a period, any benefit from the 10% wage subsidy for a remuneration paid in a specific period would generally reduce the amount available to be claimed under the CEWS 75% in that same period. There is also interaction with the work-sharing program. On March 18, 2020, the Prime Minister announced an extension of the maximum duration of the work-sharing program from 38 weeks to 76 weeks for employees affected by the COVID-19. This measure will provide income support to employees eligible for employment insurance who agree to reduce their normal working hours because of developments beyond the control of their employers. For employers and employees that are participating in a work-sharing program, EI benefits received by employees through the work-sharing program will reduce the benefit that their employer is entitled to receive under the CEWS. Next question. Is government assistance taxable? The usual treatment of tax credits and other benefits provided by the government would apply. As a consequence, the wage subsidy received by an employer would be considered government assistance and included in the employer's taxable income. Assistance received under either wage subsidy would reduce the amount of remuneration expenses eligible for other federal tax credits calculated on the same remuneration. More frequently asked questions. What's the limit of number of weeks for the wage subsidy? So far, it is only for 3 4-week periods with different March start dates as per the chart and ending June 6th or 19th, 2020, depending on the subsidy. What happens if an employee takes another job? How does it affect the subsidy? The employee must either be working and paid by the employer claiming the subsidy or being paid and not asked to report to work in order for the employer to continue claiming the subsidy for that employee. Are tips that employees earn, for example, who are in the service industry, considered eligible remuneration in calculating the wage subsidies for the employers? No, the eligible remuneration may include salary, wages, and other remuneration for which income tax withholdings by the employer are generally required. Tips are generally not included on the employee's T4 and are not subject to withholding tax by the employer. How do I know if my business is a Canadian-controlled private corporation and eligible for the small business deduction as outlined for the 10% subsidy? For your corporation to be considered a CCPC, it has to meet all of the following requirements at the end of the tax year. It is a private corporation. It is a corporation that is resident in Canada and was either incorporated in Canada or resident in Canada from June 18th, 1971 to the end of the tax year. It is not controlled directly or indirectly by one or more non-resident persons. It is not controlled directly or indirectly by one or more public corporations other than a prescribed venture capital corporation as per income tax regulations. It is not controlled by a Canadian resident corporation that lists its shares on a designated stock exchange outside of Canada. It is not controlled directly or indirectly by any combination of persons described in the 3 preceding conditions. If all of its shares that are owned by a non-resident person, by a public corporation other than a prescribed venture capital corporation, or by a corporation with a class of shares listed on a designated stock exchange, were owned by one person, that person would not own significant shares to control the corporation. No class of its shares of capital stock is listed on a designated stock exchange. In regards to the small business deduction eligibility, corporations that were Canadian-controlled private corporations throughout the tax year may be able to claim the small business deduction. The SBD reduces Part 1 tax that the corporation would otherwise have to pay. The SBD is equal to a certain percentage, the SBD rate, of whichever of the following amounts is less. The income from active business carried on in Canada, line 400 from the T2 return. The taxable income, line 405. The business limit, line 410, either of the following. For tax years starting before 2019, the amount on line 427, whichever is the reduced business limit on line 425, less the amount of the business limit you assigned under subsection 125. For tax years starting after 2018, the amount on line 428, which is the reduced business limit on line 426, less the amount of the business limit you assigned under subsection 125. How to claim the 10% subsidy. As an employer, you claim, for example, on your March eligible payroll, the 10% subsidy as a deduction right off the source remittance due April 15th. The calculation is 10% of the gross wages you paid the employees from March 18th to the 31st. You still remit all the CPP and EI, and you deduct the 10% from the tax withheld portion only. If the deduction is more than the tax withheld, you carry the remainder forward to the next remittance. There is further subsidy included with the 75% CEWS involving reduction of 100% employer's portion of the CPP and EI premiums as well. Thank you for watching this video on the financial support offered. I encourage you to watch our other videos for more helpful tools and tips to manage your finances during the COVID-19 crisis.